So there's this woman named Debra who's a teacher, but she also has a side hustle where she calls herself a writer researcher, and she deducts a lot of personal expenses through that side hustle. Debra was an aspiring author who had dreams of getting published, and she would take these lavish trips to help inspire her writing, which she had been doing since the mid 1990s. And these trips were awesome. I'm talking $20,000 a year for Disney, Hawaii, Florida, California, you name it. But the IRS eventually caught up to her and they audited her 2018, 2019, and 2020 tax returns. And during those years, Debra only made $1,045 from her writing activities, but she deducted business expenses of $187,000. So, of course, the IRS said, you don't have a real business here, and they denied all of the expenses. But Debra disagreed. She was very invested in becoming a published author, and she very much believed that these expenses would help her achieve that. So she took the IRS to tax court. Once in tax court, it was revealed that Debra's published books were roughly 2 pages in length, and her published articles were really social media posts and TripAdvisor reviews. The tax court assessed 9 factors to determine if Debra was truly engaged in a business to make a profit or if she was just trying to deduct personal expenses. In the end, the tax court agreed with the IRS and said Debra was not actually running a writing business and the expenses were only for her own personal recreation. She had no real intention of making a profit. The tax court assessed back taxes of $27,869 and penalties of $5,575. The lesson, if you're running a side hustle, it has to make real money. You can't just run a side hustle to write off your life.